Good evening, everyone. Welcome to our CalHFA programs update. We're live this evening on YouTube. My name is Jason Maida. I'm with American Pacific Mortgage. We appreciate you joining tonight's class. This is going to be more kind of an info session. We would encourage you as we go through tonight's content, you can use the chat feature in YouTube. We'll answer questions both in the chat, but we'll also answer some of those questions on air for you. So we'd encourage you to, kind of be interactive with us in tonight's discussion. And, as we go through tonight's information, we'll kind of give you updates on various programs and whatnot, but we're going to kind of give you just an overview too on home buying as well. We get a chance to teach classes similar to this once a week. So those are general home buying classes, but we've had so much attention on the second wave of California Dream for All program that we thought we would share some updates on CalHFA programs as a whole. We get a lot of inquiries about CalHFA products because we happen to be the leading provider of CalHFA products across the state of California. So providing just more resources to our community so they can better understand how to leverage first-time buyer resources, I think is really what our goal is here. And so we're going to spend about 30 minutes tonight talking a little bit about some of the programs that are available, kind of walk you through the process of home buying. And then what we'll do from there is we'll get an opportunity to kind of, like I said, answer those questions on air for you. Just a little bit about me. Again, my name is Jason. I'm with American Pacific Mortgage. We're based here in Sacramento. That's kind of our hub of our operation. But we work with clients all across the state of California. So whether you're in the Bay Area, Sacramento, maybe you're in the Central Valley or LA, Orange County, or San Diego, we service clients. We have a virtual platform that we help our clients, and really it's based upon really serving the needs of first-time home buyers. So, beyond this kind of session that you're going through today, we really encourage you, if you do want to check out some of our classes, you can always visit mortgageeducate.com. So let's talk a little bit about what is CalHFA, because I know many of you that are attending tonight's session, have heard about CalHFA, but you've probably connected with it because of the California Dream for all the publicity around it. And so that might be why you're attending tonight's session. But let me tell you a little bit what CalHFA is. CalHFA is the California Housing Finance Agency. Sometimes people will get that kind of confused with FHA. So it's not a product per se, it's an assistance agency that helps serve low to moderate income households in California in homeownership. And so it's an agency just down the street here in downtown Sacramento over on Capitol Mall. And, it's really serving the needs of low to moderate income households, trying to strive for affordable, but also sustainable homeownership. So, I'm really proud to be a partner with CalHFA as one of the hero lenders with CalHFA. And we've been serving the needs of home buyers over the last 10 plus years with the CalHFA product line. So let's talk a little bit about what the product line looks like. And because we're getting a lot of attention around California Dream for All program, but today there's some fantastic programs that are available with CalHFA. So I want to share with you a little bit about those today. First of all, we're going to talk about the MyHome Assistance program. What that is a low interest rate loan that you can get to help support your buying for either a conventional loan, FHA loan, even a VA loan, and matter of fact, a USDA loan is all allowed under the MyHome Assistance program. And for a conventional loan or an FHA loan, well, first of all, for conventional, you can get up to 3% of your sales price in assistance. So the minimum down payment for a conventional loan is 3%. So that could be covered potentially through the MyHome Assistance program. Now, if I need to go with maybe an FHA product, the minimum down payment is 3.5%, and that can be covered through the MyHome Assistance program. So this is a little different than some of the other programs you've heard about in the past, like the Equity Builder program, maybe the California Dream for All program. What this is, it's a low interest rate loan at 1% interest. And what that is, it's a simple interest rate loan. But what's really cool about the program is you don't have to pay back the assistance until you either decide to sell the home or maybe if you even refinance in the future. So that's the MyHome Assistance program. That is available now for our first-time home buyers, and it's a great solution that buyers can take advantage of. So that never changes. That doesn't come in and out of the market. It's always kind of a staple product with CalHFA. Now, the other program is called ZIP Assistance, which is also known as the Zero Interest Program. So when it comes to purchasing a home, we not only have to save up for down payment, but we also have closing costs. And ZIP Assistance can help kind of provide additional support, if you will, for closing costs. It's a zero interest rate loan at 2 to 3% of your loan amount that can be used to help offset those closing costs. Now, the way it works with CalHFA assistance programs is I have to first take advantage of a MyHome assistance program. Then if I still have additional needs, then I can kind of add on the ZIP assistance program. So that's kind of what that would look like. You can't jump straight to the ZIP assistance program. Now, to be transparent with our audience tonight, the ZIP assistance program can be a little challenging from an affordability perspective right now for buyers, because what happens is when we add on ZIP assistance, it also increases the level of interest rate that we offer on a first mortgage product. So that's something we just have to kind of keep in mind. It doesn't always fit well for our buyers, and because it will raise that monthly payment. MyHome assistance, however, it's a standard rate. In some cases, we've seen that rate actually be slightly lower than the standard conventional rate that's offered in the marketplace right now. So that's something just to keep in mind. One of the questions that comes up with CalHFA programs that I think it's important to understand is that the assistance programs are not independent, where you can use other financing. So if I was approved with a different lender, I could use their conventional product and then still get assistance for CalHFA. CalHFA loans have to work in unison with each other. So there's the CalHFA first mortgage along with the assistance program. So, but you do have the options of conventional loans, FHA, like I said, VA and USDA products with CalHFA. So let me just give you a quick example of what a conventional loan product looks like today if we were to take advantage of the MyHome assistance program. So traditionally, if I was to purchase with a conventional loan, a $450 sales price, let's say I have 3% down payment, that's the minimum. I'm also going to have to carve out some savings for my closing costs. And generally, when I consult with clients, we recommend carving out 2 to 3% of your sales price to estimate for closing costs. So in that scenario, I'm probably going to need $22,500, maybe to $27,000, somewhere in that range, given what we see with typical home purchases. Now, let's say I decide to now go with the MyHome assistance program. Now what I'm able to do is lower my cash out of pocket, because now I can insert 3% assistance to help offset the down payment requirement. So maybe I'm only having to put maybe $9,000 to $13,500 out of pocket. So that helps decrease my out of pocket expense, and then my only asset requirement would be around closing costs. Now, as I mentioned earlier, the ZIP assistance can also kind of be added in to decrease that cash even further. So that's a really great option for our first-time home buyers. And again, that product is always available for first-time buyers. And we get a chance to consult with clients every day about that product. Now, the highly anticipated program, which, it's the communications out for the program in terms of the funding, but the logistics and timeline of that is not. And that's around the California Dream for All shared appreciation. And that's really kind of the reason why we put a program like this together tonight, because we get so many inquiries about California Dream for All that I want to kind of make sure everyone's on the same page when it comes to the timeline of this, because we really don't even know what the communication timeline is going to look like right now. What we do know is that the program has a $200 million allocation from the State General Fund for kind of a 2.0 version of California Dream for All. That was announced on June 29th. But we are going through some product enhancements and review of the guidelines that we have from, say, the 1.0 version, just to make sure funds are being allocated to the borrowers and families that truly have that need for home financing. So that's what's going to be undertaking. But we haven't actually met as a team yet to start going through those kind of review periods. I do believe that's probably going to happen sometime in the next several months. The latest email we got from CalHFA, and those of you that are subscribed to the CalHFA email distribution list, talked about communication coming out in the fall. Now, that communication is not necessarily the launch of the program, and I think that's where there's a little bit of a misinterpretation. It's just communicating out the timeline of California Dream for All. So I know we're all excited as our communities go, and that's why we get a lot of attention on the product, but we still have a long way to go. So it's a little bit of a longer runway than I think was anticipated when the first $200 million announcement was made. So, as we move forward, and especially in tonight's discussion, I want to kind of just give you feedback on what we learned in our first wave of California Dream for All program, how you might get prepared for home financing when the product guidelines are eventually rolled out. And, just to make sure you understand better about what that process will look like on that path towards homeownership. Now, the last round of funding that we had earlier this year was $300 million for California Dream for All. We're proud to say that we were one of the leading providers of the program in earlier this year, but those funds ran out in 10 days. So the program had a lot of attention, and that's why I think everybody's really excited. Like, how do I get in before the funds run out? How do I reserve my funds? Well, that's not something that we can accomplish now, right? Because we don't really know what the program is going to look like. In fact, the program was 20% at the first round of funding, but that could look completely different for like the 2.0 version of California Dream for All. So I think that's really important to understand that things are going to be changed potentially, which could make the product look a little bit different. But I thought it would be important to share with you what we kind of had as guidelines in the last program, because many of you maybe heard about the program late, didn't really have an opportunity to access the funds, of course, and maybe just learn from a friend or family, maybe a coworker, maybe didn't totally get the accurate information of what the last wave of funding looked like. But ultimately, what California Dream for All 1.0 was, it was 20% shared appreciation. And what happened with that program is you had a 1-to-1 equity share with the program. So if I got 20% in assistance funds, it was a 20% equity share. Or if I decided to take lesser assistance of, say, 10%, then it would be 10% equity share. So that program obviously was a huge success. The program, though, I think it's important to understand, with the 20% was not free money. So the 20% was a no interest rate loan that would have a trigger of repayment when you either sold a home or if you refinanced in the future. And the product was based upon loan limits set by Fannie Mae. So the highest loan amount across the state of California for high cost of living areas is $1,089,300. So that loan amount will vary across different parts of the state. So when we think about it, $1,089,300 loan amount, Santa Clara County, some of our other Bay Area counties, San Francisco, San Mateo County, LA, not San Diego, but Orange County. So those would be at the higher limit. So those are all kind of calibrated according to county and obviously cost of living relevant to those counties. Now, when we look at the program and now we think about our loan scenario that we shared with you earlier, what this program did differently was, instead of having a 3% down payment option, then it gave buyers the opportunity to put more down. And of course, with the cost of living being where it is in California, I think that creates a lot of excitement for consumers, because they say, wow, I can put this much more money down so I can bring my payment down to this. Wow, that sounds really a lot more attractive for me than, maybe my current situation or my prospective buying opportunity. On average, we saw most clients saving anywhere between $400 to $500 a month getting access to those additional funds. So we understand why there would be excitement. In our classes that we taught at the launch of 1.0, there was a shared appreciation example, and you can find this on the CalHFA website, which gives you a sense of like, how did the appreciation program worked at that time. Now, this is what it was in the 1.0 version. It could look different in the next wave of California Dream for All funding, but this ultimately kind of shows you what that looked like as an example of a home value or home purchase price of $500,000. You can see if I sold a home 5 years later, my home appreciates in value, what my participation is from the state with my shared appreciation, my repayment of the 20% that I originally received from the funding of my loan, and what that looks like as a homeowner when that triggers as a repayment. So these were great tools that we use to help educate our buyers so they can better understand how shared appreciation works, because while it's a wonderful program that provides awesome support for our low to moderate income households, there is that trade-off, right? And I think that's where it's important for us to understand that it's not free money, it's repaid money, and it's also shared appreciation with the state. So while it sounds really exciting and it creates better affordability, I think we need to understand the mechanics of it. And so that's why we really pride ourselves, and what we did, I think, a pretty good job of is really educating our clients to understand what the California Dream for All program really looked like. And then this slide kind of shows you an example of kind of what does it look like shared appreciation over time versus equity. So this is another tool that was available to buyers through CalHFA. The eligibility requirements last time looked a little something like this. And this is these are kind of the baseline, by the way, guidelines for CalHFA eligibility requirements. So with the FHA product, FHA is a minimum score of 640. However, with California Dream for All program, at least 1.0, there was only the conventional loan option. And that's a 680 minimum score for our moderate income buyers. It's a 660 credit score for low income buyers. The program set for CalHFA allows 45 to 50% debt to income ratio. In case you haven't attended one of our classes in the past, let me tell you a little bit about what debt to income ratio is. It's simply your gross monthly income versus your outgoing expenses. So we look at credit cards, personal loans, auto loans, the upcoming mortgage payment, which would be the principal and interest, the taxes, the insurance, the mortgage insurance, all of those payments versus your gross monthly income brings us a calculation of debt to income ratio. Okay. And then income limits are set by CalHFA for each county. So we have a few on the board, depending on where you're joining us from tonight in tonight's class. There's obviously corresponding income limits. Those are based upon the county that you're going to purchase in, not where you live in today. So if I live in Sacramento County and I'm going to purchase in San Joaquin County, it's going to be based upon where that house is at, where I decide to purchase. Now, an interesting point with CalHFA is that the income limits are based upon applicant income, not the household income. And that's a big differentiation point between CalHFA and other first-time buyer programs. So, for example, if I make $150,000 per year, but my spouse makes $100,000 a year, if I'm going to buy in Sacramento County, our combined income is over the income limit. However, if I'm going to apply and I can qualify with just my income, then my $150,000 per year would keep us within the income limits for Sacramento County. Now, a first-time home buyer is someone that hasn't owned in the last 3 years. So I could have sold my house in 2010 and I'm looking to buy again. You can do that as long as it hasn't been in the last 3 years. So I have to have left that house, 3 years plus ago, and then I could potentially be a first-time buyer again. And first-time buyer programs are eligible for single-family homes, condos, townhouses, even manufactured homes. But those have to be on permanent foundation. So you have to own the land that's underneath the manufactured home. So basically with first-time buyer programs, it has to be a one-unit property, cannot be multi-unit properties. One of the questions that comes up as I consult with clients throughout our day is around the eligibility for first-time buyer programs. So one of the things is if I live in a house that's currently owned by a spouse and we're married, then I would not be eligible for first-time buyer programs. So even though if I've never purchased before, but I'm living in the house that my spouse owns, then because I live in that property, I would not be considered a first-time buyer. So we see that, somewhat, I wouldn't say frequently, but it does come out in our conversations with clients. So I just want to kind of share that with our audience tonight. Okay, so let's talk a little bit about the process, because I think this will be important for you to kind of understand, especially when it comes to the timeline, because I know everyone attending tonight's session really wants to be best prepared to take advantage of first-time buyer resources, whether it be California Dream for All, the next version whenever that rolls out, or some of the available CalHFA assistance programs today. So this is an aid that we share with our classes and our home buyer classes. It's called the 6 Steps of Home Buying. And I just want to give you a quick overview of this, just so you can better understand the process. And like I said, make sure that you're prepared that when it comes to getting ready for home buying, whether it's this year or even next year, you understand what this could look like for you. So the first step is pre-approval. The pre-approval is good for 60 days and allows you obviously to start your home shopping. Now, one of the questions that comes up, especially with California Dream for All, and unfortunately I see this a lot in social media where lenders are advertising pre-approving clients for California Dream, and you just can't do that right now because there is not a product right now for California Dream. So we can consult with clients in what-if scenarios, but a pre-approval unfortunately is not available at this time. Once the guidelines appear and are available to lenders, then pre-approvals can be issued for the home process. So right now, the only pre-approval that can be issued would just be for those available products through CalHFA that are available, like MyHome Assistance and Zip Assistance. Now, at some point, when we do have those approved guidelines from CalHFA, then the pre-approvals will be able to be processed accordingly. So if we get pre-approved, now step 2 comes to house hunting. So that's when we get a chance to partner with a realtor, get a chance to look at homes in our community that kind of fit what we're looking for. That process is probably the most strenuous, could be the most lengthy process, especially if we don't have a lot of inventory to choose from. We do see a lot of buyers, especially in today's market, deferring to maybe new construction because there's just not as much inventory out there. One of the challenges we face right now in the market is, some sellers just aren't or not willing to become sellers because they don't want to trade in their 2.5% or 3% interest rate loans to maybe upgrade to the next house. So that kind of puts a little bit of a slowdown in inventory that's available. Hopefully that'll open up over time, and I do believe it will. But some buyers are turning to maybe new homes as a possible solution. Now, when we eventually find our house that we want to make an offer on, if that offer gets accepted, then we go into entering escrow. So that means a seller has accepted our offer and it starts the process. Now, when it comes to reservations for first-time buyer programs, and especially with the California Dream for All program, your funds are not reserved with the product until you have an accepted offer with the seller. So kind of flashback a little bit to March 27th, 2023, that's when the product launched. And at that time, reservations were open. Clients could not be reserved with the program until they had an accepted offer. So what you found happening is a lot of clients just going out and rushing the market to try to find any house that they would work for them. And, it was a little bit of a stressful process, not only for the buyers, but certainly for us as lenders, because, we want to have a buyer experience that feels like you're finding the right home that fits for you and your family, not this rush purchase just to get access to funds. So I don't know if that'll change in the next wave of funding. I hope it maybe does. I don't know if there's a way to kind of curtail that, but, that is where the reservation happens of funds, is once we have an accepted offer. And it holds true also for the MyHome Assistance Program. So the MyHome Assistance Program, if you want to take advantage of that today, you get reserved for your funds once you have an accepted offer. We got a chance to reserve multiple clients today for that program, and that happens right at the acceptance of offer. Now, one of the things I wanted to point out to you, when you eventually find that home, you do have to make an earnest money deposit. And I think that's pretty important to understand, because even though you can get access to assistance funds, there's still going to be out-of-pocket expense that we need to anticipate. You may not have as much from a down payment perspective, but there is going to be closing costs that may not be that won't be part of your financing. They could be negotiated with the seller, but more than likely going to be out of pocket. But there's also the earnest money deposit. What an earnest money deposit is, it's a good faith deposit that you're making for that home purchase. It's usually 1% to 2% of your sales price. Now, it does count towards your total cash out of pocket, but it's something that you're going to have to invest out of pocket. So, unfortunately, you're not going to be able to get a situation, whether in today's products or future products, where you can have assistance that's going to cover everything, including your deposit, because the seller is going to want to see that you have some type of financial interest in this property. And that, again, that's called the earnest money deposit. Now, that deposit is protected by what we call as the contingency. And contingencies allow you as a buyer to do your homework on the property. So generally, this is a time frame from anywhere from 7 days to 17 days that allows you to do that homework. And that's going to include getting your house appraised, getting the house inspected, and the inspection will be generally orchestrated by the realtor. And then, of course, getting your loan approved. So as a lender, you can see in this slide here, we're going to handle both the appraisal and the loan approval. So that'll take care of that on our side. So those are things that are going on behind the scenes, kind of more of administratively, for the processing of your home purchase. That also includes, verifying your employment, verifying assets. Part of the program is we lock in your interest rate. So when we reserve your funds, we also lock in your interest rate, especially for first-time buyer programs like CalHFA products. The processing happens in step 4. And then at step 5, we issue a loan approval. And by that time, we're about 3/4 of the way through the process. And it also brings you to the end of a contingency period. So once you hit the day 17 or whatever you've negotiated with the seller, if you feel comfortable with your inspections, you feel comfortable with your loan approval, and of course the appraisal has come back, which supports the value of your home or the purchase price of your home, then you can move forward with removing that contingency. What it does when you remove contingency, it tells the seller that you've done all that homework and you feel good about moving to the final stages of the process. But when you do that, you also put your deposit at risk. So there's kind of like, if you're going to turn back at that point, you could potentially risk your deposit. Like if you decide to cancel after the contingency, you could risk losing the deposit. So you just want to make sure that you feel comfortable with, all the homework that you've done. Now, as a lender, before we move to the final stage, which is step 6, we're going to issue to you a final closing disclosure, which gives you a 3-day cooling off period to make sure all the terms and conditions are in line with what you've seen in previous disclosures. Now, step 6 gets us to the loan closing, which is when you sign final documents with the public notary. Everything up to that point is all done via e-signature, but step 6 is a little old school. We still do the, sit in front of a public notary, you sign documents, you sign their notary book, all that stuff happens there. Usually that same day, you're going to deposit any other funds that are required for your home purchase. And then those monies get reconciled along with the financing, the assistance program. And there's an escrow team that will help reconcile those numbers to ensure, or the funding, just to ensure that the seller's receiving their proceeds correctly, you're contributing what you're supposed to as a buyer, and then documents get recorded with the county recorder's office. They usually record a grant deed, which transfers ownership to you, as well as a deed of trust, which is your agreement to repay the loan. And the best part of our job is when we get a chance to make that call, that everything is confirmed as recorded, because now you become the owner of that home. And that's really a great day. I got a chance to make a couple of those calls today. It's the best part of my job beyond teaching classes every week. And I get a chance to, celebrate with our clients in achieving that huge victory of homeownership. It's a big deal. And we like to celebrate it right along with our clients. So I just want to give you a little bit about the process, because I think it's really important to understand that, because there's a lot of excitement about products, and everybody has uncertainty about the market or has a kind of a different perspective on the market. But I think it's really helpful as a first-time buyer, especially when we just don't really know what to expect, how to better understand what the process looks like. So as we're thinking about what's to come here with products, the future of our housing market, interest rates, I think it's a great time to kind of step back for a second and now build a home buying game plan for yourself. And that's something we do on a daily basis. We meet with clients for 30 to 45 minutes. And it starts with a really simple online application to kind of set up your financial profile. You upload documents, and then you schedule a video session with us. We meet with you just like this, but in a Zoom format for about 30 minutes. And we're kind of planning, like, what does it look like from a budget perspective? Where do I think I want to buy? What's the price of my house? Am I partnering with a realtor? What's my debt to income ratio look like? What's affordability going to be like for my family? What do I think I need to be saving up over the next several months to make sure home ownership is something that's totally achievable for me? Or maybe I need to fix something that's on my credit that I didn't know existed. So all of those things come out of that home buying game plan. We have clients that are ready to go right now and they hit the ground running. We have other clients that have a 3 to 6 month plan. Some clients have a 1 to 2 year plan, but you don't know what you don't know, right? So I think that's why it's important for you to, kind of meet with us, just to have that one-on-one session. It's a free service. And one of the best things about it starts with a soft credit check, because I think that's always a hesitancy for most clients, is like, hey, I don't want to have a hard inquiry on my credit because I'm not ready to go yet. Well, you don't have to worry about that, because it starts with that soft credit check. Now, after tonight's session, you may just have some questions that maybe you don't want to ask in the chat or on air. We can do an intro call with you if you just want to kind of maybe go over like a deeper dive in your situation and just kind of help us better understand how we can help you. And then here's the information on that pre-approval consultation that we do. Now, again, we can't pre-approve you on any future products. We only can pre-approve you on existing products. But on this slide here, and we'll send out our material so you have it, we have all the links here available for you. Now, you may have heard about our team here because of our different community partnerships. We're very active in our communities that we serve across the state, whether through our university partnerships, our state employees here in California. We're trying to make sure that we're out in our community adding value through education and homeownership. So if you're, a part of one of these partnerships, that also passes along a special discount for those that are either employed by the state or affiliated with some of our alumni partnerships. So really cool benefit that we pass along to our community. Here's all my contact information. So if you like what you've heard tonight and you want to get connected with us, you can obviously schedule a consultation. But if you might have some follow-up questions too, you can always feel free to email me. And we try to put good content in our social channels, and especially with so much talk around California Dream for All program, we want to deliver to our communities the right information. I can't tell you how much wrong information I see out there. So we'd encourage you to check us out at J. Mortgage on our Instagram. We're a pretty good follow to get some good content that'll be useful for you on your path towards homeownership. So I'm checking our chat. I don't see a lot of questions coming in, but I want to open it up again because we do have a few minutes left in tonight's session to answer any questions. So feel free to use the chat in YouTube, and I'll answer questions live here or respond to you in chat if necessary. So I'm going to go ahead and open it up. Well, it has been open, but feel free to ask any questions. And, while we're waiting for if any questions do come in, I just want to share with you too, I'm really excited about, what's to come with California Dream for All. I think there's a huge opportunity to help get more access to home ownership for our local communities. I'm really passionate about that. We work with clients that, have saved up, to get to $10,000 to $15,000 in savings is a big deal for them. But we have other clients that have saved $100,000 to $150,000 and ready for home ownership. But I do believe everybody deserves access to home ownership. So it's really up to us to provide them the tools and resources to get there. And I do think California Dream for All program can be that product to help support our communities in that. Okay, so here's some questions coming in. So let's see. So the first question is, does the Dream for All apply to new construction, which takes different phases to complete to build? So the answer is yes. So new construction is absolutely allowed on the program. We had clients that actually were reserved in the first wave of funding for California Dream for All. So that was week one. Those products or properties, I should say, are wrapping up construction. We had one close actually just last week. We have the latest closing will be at the end of August, end of next month. So you can't go too far out because there's only a 4-month window that we can go to with extensions on the reservation. So that gets a little tricky. So it can't be too far down the line, but certainly within 4 months is attainable for new construction. So another question was, what was the loan limit last time for San Diego? So I'm going to go off of memory. I believe that was right around 960. We'll have Ken, who's in the background, do a fact check on that, but I believe it's right around 960. Oh, there we go. I got in the chat here, 9775. That wasn't really me doing that. That was Ken. So thanks, Ken, for that. Okay, so question was, can you expand a little bit on what you said earlier about the MyHome and not being able to work with other lenders? So yeah, so it's not that you can't work with other lenders. What I meant by that is we get some questions inquiries that come to us. Let's say, for example, I'm approved with Citibank as a first mortgage loan, and they've given me 6.125%. But I really still need the MyHome assistance because I can't make up the gap for the out-of-pocket. So what I mean by that is, you would have to work with an approved lender to have your first mortgage with an approved CalHFA lender to get access to the MyHome assistance. You couldn't go separately and say, hey, I want to keep my Citibank mortgage loan because I like that interest rate a little bit better, and then I just want the MyHome assistance. They have to work in conjunction with each other. Hopefully that answers your question. And there are several CalHFA lenders across the state. Some of them are more experienced than others. I feel really fortunate to be the leading provider of CalHFA products across the state. I love the product. It's something that it's not. It's something that takes a little bit of skill because they're not always maybe cookie cutter financing transactions. So it really takes a lot of time and patience and extra effort to help deliver that for our clients. But I love doing it. I mean, I wouldn't choose anything different. Another question is, do you guys offer credit repair services or have partners to help? So there are partners that we've worked with in the past. Blue Water Credit comes to mind that will refer clients out. We do a dive into credit, and I can help you in to a certain level with credit. We only have so much capacity, but we can give you the different tools and resources. We have different modeling that we can do for credit. But if it's kind of like some deeper things that we got to maybe look at some legacy things in credit, we would encourage you to talk with our partners. So I think Blue Water Credit, for example, would be a great resource for you. Awesome. Great questions, everyone. Okay. Any other questions out there that I can help answer? And I just kind of make a quick commentary on the market because I think there's a lot of everybody has their perspective on the market, right? So we work in the housing market on a daily basis. And I think, there is still some wonderful opportunities today in today's market. Now, I commented a little bit earlier that there's just a lack of inventory, not as many choices for buyers, but there still presents opportunities for home buying, whether that's in the resale market or new construction. I think everybody wants to time the market. We want the lowest prices. We want the lowest rates, right? You're probably not going to get that cycle to happen. And so I think, it's really important to sit down and really kind of map out a plan, because when the opportunity presents itself, like, you want to make sure that you have your financial house in order. So whether that's better understanding your credit, having your savings plan set aside, income, structured properly, I think all those things are really important. So, as we meet with people throughout the year, no, it's not about necessarily saying, let's go run out and buy a house tomorrow. It could be a plan for 24 or 25. So I think that's really important to understand. It's really kind of planning for our financial future and understanding the market, where it may be something of an opportunity for us today, because, at the end of the day, interest rates are in a higher level. We all know that, right? But, ultimately we could look at opportunities for refinancing down the road. So like I tell a lot of our clients when I consult with them throughout the day, like, it's probably not going to be the forever loan, because ultimately interest rates will cycle down at some point. Do we know when? No, but we need to kind of say, hey, we can get into the market now. Rates might not be ideal, but at least we have an opportunity to refinance down the road. Okay, another question that came in: is there a loan origination fee for the Dream for All? So yes, there is. So first-time buyer programs always have an origination fee. Those origination fees will vary by lender. Usually the origination fee is anywhere between 1.5 to 1.75% of your loan amount. So those will vary by lender. I know our particular structure seems to be one of the most competitive, just because we are a leading provider of the program. And then in addition to that, obviously we have discount programs that are available too. But yeah, there are origination fees with first-time buyer programs. And just to give you kind of the why behind that, economics are different in first-time buyer programs for lenders than they are for traditional financing. Even though these are still conventional loans or FHA, it just looks a little bit different economically. And so, that's why at times not all lenders want to participate in these programs, because they may not be as profitable for them as a lender. But we really believe in serving our community and homeownership. So, it's high priority for us in our business. Okay. I know we're a little bit over time here from our scheduled format here, but I do want to make sure, in case I missed anything, I know we have still a few more viewers that are tuning in here. And I'll just give one other comment on kind of the interest rate market. We saw interest rates start to move a bit today. GDP came in a bit higher than expected. That is right on the heels of Chairman Powell speaking a little bit about interest rates and the kind of the forward forecast for the Federal Reserve's monetary policy. Rates were increased. The federal funds rate was raised by 0.25%. Didn't do much to the markets, but the markets moved negatively to interest rates today just based upon GDP. Good news, unfortunately, is bad news for interest rates. So we'll see where interest rates go. I think we've kind of tipped out the highest in interest rates. I don't think we're going above 7% again. Let's just hope that's the case. So, but we'll be watching rates pretty carefully. Okay, a couple of questions came in just while I was kind of sharing with you the interest rates. Can I start the pre-approval now and get recertified till the second wave of California Dream comes out? So we can't, as I mentioned earlier, I can't pre-approve clients on California Dream for All because we don't want to set the wrong expectations of qualifying, because we don't know what guidelines look like. And that's why I was saying lenders that are presenting that right now, it's just really unfair to the consumer because we don't know. The program might not even be 20%. So, I mean, and we may not know the credit score. We just don't know what the inner workings of the program are going to look like. Now, can you be pre-approved on the MyHome assistance program? Absolutely. And we do that on a daily basis, right? So you can get pre-approved. We can have a baseline set up for you on the MyHome assistance program. And then if home shopping takes you a little bit longer, and oh, by the way, now I'm ready to go when the California Dream product rolls out, then we can do a recertification and maybe switch gears and look at the California Dream product. But today we can't do the pre-approval qualifying just for California Dream for All. The other question is, what does an interest rate lock mean? So that's a great question. So when we think about an interest rate lock, so what that means is during the processing of your loan, and I'm going to go back a little bit on my slide Oops. Let me see. Let me take us back here. Okay, there we go. So let's just kind of just do a quick little shuffle back here. So we're going to go back to step 3. So step 3, we're generally going to think about locking in the interest rate. So what that means is when you lock in an interest rate, the processing of your loan, that rate is absolutely secured. So today, some clients were locked in at 6.625%. And that's a 30-day lock. That means during the processing of the loan, that interest rate is secured for 30 days. So rates are going to probably jump up to 6.875 tomorrow, but they were locked in today. So they're protected against that rate going up to 6.875. They don't have to worry about that. So, and that's really important phase in the process because like the market is super volatile right now. One day we could be at 6.6, one day we're at 7%, one day we're at 6.25. And so as a consumer, when you've planned your budget off a certain interest rate, that's what we want to deliver for you as a lender. I mean, that's our goal. We can't just say, oh, well, the interest rate's this now, right? We want to make sure that we deliver on the expectations. And so at step 3, we're doing a follow-up consultation with our clients to talk about their product design and talk about what we can deliver. And we want to make sure that we meet expectations for our buyers, right? So, but that's kind of what an interest rate lock means. Now, the question that came up earlier was, well, Jason, if I'm doing new construction, I think is what I heard. I talked about a 4-month period. Well, when you reserve funds for an assistance program, you're also going to reserve the lock. So that lock can be reserved out for 4 months. So that means that interest rate is secured for a full 4 months. Now, one thing I think brings up an interesting topic, which is changes in the market. So when you lock in an interest rate, you are locking in against the upside against the market, right? So if I lock in today at 6.6, rate goes to 6.8, I'm protected, right? But CalHFA programs are a little bit different. If I lock in today at 6.6, but then the market 2 weeks from now drops to 6.25, I don't get to participate in the lower interest rate. So you don't get to what we call float down to that lower rate. Traditional standard conventional loans, you can do that, but not on CalHFA loans. Once you reserve funds, you're locked in. There's no kind of going up and back and forth with interest rates. Okay. And your interest rate is locked in on that particular property. So that probably brings up another good point, which is with California Dream for All program, we saw some clients that, made a reservation on property A. Inspections turned out bad on that product, but they still really wanted the California Dream product. You can't cancel your reservation or move your reservation from one property to the other. So once you reserved on one property and that property doesn't work, then you can't, use that for another. You have to basically reapply for a new reservation. And, with the timing of everything, there's not necessarily a given that you're going to get a reservation on the next property, just because if the funds are eliminated by then. Okay, I know my questions are stacking up on me, so let me just try to get a few more of these accomplished here. Okay, so So another question was, when you get pre-approved, do you have an idea of what the interest rate will be? So yeah, so when we do a pre-approval, we always give a pre-approval out based upon current market interest rates. So if today you got a pre-approval from our team, that rate's going to be at 6.875, right? So that'd be for the conventional product through CalHFA. Now, that interest rate is not locked at that time. It's not locked until I have an accepted offer with the seller. So that market rate can change based upon the timing of my home search and ultimately when I have an accepted offer with the seller. So really good question. So the other question that came in is, which loan is better through CalHFA, FHA or conventional? So that really depends, right? So, and we do a deeper dive into this during our home buying classes, and we do a cross comparison between FHA and conventional. Not all clients are going to qualify for conventional, whether it's because of the credit score minimums. It could be maybe past challenges around credit. That could impact which way I go with the product offering. FHA loans have a little more expensive mortgage insurance. So if I put less than 20% down on a conventional loan, I have mortgage insurance. But FHA, I have mortgage insurance regardless if I put 20% down or not. The mortgage insurance factor on an FHA loan is 0.55% for a 3.5% down payment. For a conventional loan with an equivalent score of 740, the factor is probably 0.37%. But FHA also has upfront mortgage insurance, which adds additional money on top of your amount financed. So I guess the long way to answer your question is FHA can be a little bit more expensive than conventional, but not all clients will qualify for conventional. So that's why I think it's really important to sit down with us and really kind of map out a plan so you have a really good understanding of what product makes the most sense for your financial situation. Okay. All right, great questions. Let me see if there's anything. See if I can. Okay. Okay. I think we're good there. Is there any other questions that I can answer from the audience? I know we kind of gave you a little bit of everything here tonight, but I want to kind of give you guys perspective. I want to help kind of equip you on that journey towards home ownership, to make sure that kind of give you kind of what's happening in the market right now. Okay. We're good. All right. Well, we're going to wrap up tonight's session. I appreciate everybody joining us for this live session. Our plan moving forward is, as I receive more information, we're going to disseminate that information, get that out to our viewers, and host more info sessions on YouTube like this. We would also encourage you, follow us on our social channels. I think, like I said earlier, we're trying to put out good content that's going to help support you, give you the resources you need. Whether we're talking about CalHFA or credit or process or all the helpful tools that you'll need along your journey towards homeownership. So, give us a follow. I think that'd be great. There'll be lots of communication coming out in the fall. So stay tuned for that. If you haven't subscribed for CalHFA's email distribution, I highly encourage you to do that. As we get the same notifications, we're going to be putting those out through our email notifications and, of course, posting those on our social channels. So thank you so much for joining us tonight. I look forward to connecting with you all soon for your upcoming consultation. Have a good night.